Good morning. We are at a great entry point right now in oil, so I thought I would do a quick video. Today is April, oh, is it May? Yeah, it's May 1st, 2019. And as you can see on this chart, this is the 4 hour chart. We've been in an uptrend over the last 2 weeks. On the daily chart, we have been in a uptrend. Okay, and you can see that on this ATR trailing stop, has been preserved and moving along nicely with the market as it's making higher highs, and you can see that here. These are retracements. These lower lows right here are retracement areas. You can see that on the stochastic as well. But overall, the market has been respecting this support level. So let's go into the 4 hour, the 12-hour chart, and we'll give you 180 days. So this is the 8 hour chart. Sorry. So on the 8 hour chart, you can see the market did a big retracement a couple days ago, and respected this support level, which is the daily ATR support level. And you can see on this chart also that the 200 period moving average is up below the 50 period moving average, which signifies that the energy of the market is moving up and making higher highs. So in this kind of environment, we want to get in on retracements to support. Retracement to support. How do we find support? Well, let's go to the 4 hour. All right, the 4 hour gives you a little more detail. It's like it's like looking at the 5,000 foot, the 500 foot view, whereas opposed to the 8 hour, that's like the 50,000 foot view. As you go more and more in along the lower time frames, you get more and more detail. There's other things that we're looking at. I forgot to show you too that the ATR on the daily was 1.3. 1.3. That means that these waves up and down are vibrating at about $1.3 per day, right? So that's important because that's what it does most of the time. It's kind of just vibrating in a meaningless fashion, in a sideways pattern, and that's when we really like to get in on those entries. So from yesterday, this area is today. So from yesterday, we moved from a previous low all the way about $2.40 move. That was Monday. Okay, coming from this big retracement. So we respected this demand area or this support area here. This is the daily level that's been respected for several months. And we moved from that low, this is the low, to the high. And one day we moved $2.42. Okay, so then it has to take a break. That's a big move. That's greater than the average true range. So it has to take a break. So you get some exits. And that's what we saw overnight. Yesterday and overnight was a pullback of 172, 171. And that's this number here, which is a little greater than the average true range. So around that time, you're anticipating a breakout to the upside, and there we have our breakout. The stochastic can help you with that because when it gets super oversold, it's not super oversold, but you can see it's getting oversold. You're anticipating a breakout higher high, right? right? You're anticipating a breakout higher high, and that's what we have in this candle right here. Sometimes I go down to sometimes what I do to time my entries is that when the market gets super oversold on the 4-hour, I go down to the 1-hour chart. Okay, this is the 1-hour chart. So when we were super oversold, I mark it on the 4-hour like this. Okay, I'll put that green line right there to signify, to remind myself, this is oversold on the 4-hour. Usually when you see an oversold level on the 4-hour, that's a big deal. That's a big deal. That means that the market is truly oversold. Then I measure it. Okay, I moved 172 from the previous high. All right, then I wait. Okay, you gotta wait. You can't just go long. You need to have a sign. Okay, so here's our pullback, 172 from previous high. Here's where we started getting oversold on the 4-hour, and you see right there we see a breakout higher high, and we're on the 1-hour chart now. Okay, and so my anticipation at this point is another higher high, another higher high, another higher high, another higher high. When do I consider getting out? I consider getting out when we made that average true range. So right now, from today, this is the low of the day, right here, and you can see it happening right here. This is the low of the day, right? And we know the average true range is 1.3. So when you start getting up in here $1 away from the low, that's when I consider, that's probably it. That's probably the move for the day. Okay, what do you do then? Then I start getting greedy. Right now I got to control my fear that the market is not gonna go through here, right? And then as the market gets to its highest level, that's when you got to kick into greed mode and start moving the stop in and capture as many points as you possibly can, because most likely it's going to reverse when it hits that 1.2, 1.3. It'll reverse. Okay, it has to. Those guys have to exit their positions. So right now, okay, somewhere in here I entered long, right? Because we moved that dollar. We moved that, what was that, $1.04 or so? We moved that dollar, then I started seeing breakouts to the upside, so I'm anticipating higher highs, on a 4-hour basis, maybe a few more of these. And then on the 1-hour, when I saw this, okay, after the pullback, after the oversold condition is confirmed on the 4-hour, that's the condition indicator. Then I'll wait for a breakout, and that's when I go long. Okay, when this thing starts moving along and the range from the low to the high is about $1, that's when I move my stop in and try to capture as many pips as possible. Now, if it decides to do a hyperwarp drive on me, that's even better. But if it doesn't, and most of the time it doesn't, you take your money and you run. You take your money and you run. That's the key. So I think this was a good video. I hope it was helpful. Hey, everybody should know how to trade. That's my point. We all should be doing this on a daily basis. It should be like going to work. All right, so I'll talk to you later. Bye.